This trading week, market participants are looking forward to a few crucial reports that will enable them to assess current conditions in the global economy. Let's watch a video calendar on InstaForex TV channel to find out what data and events will set the market in motion. On Thursday, February 4th, the Bank of England's policy meeting is on investors' radars. Earlier, Governor Andrew Bailey assured the market that the central bank aimed to put the key policy rate at near zero. Besides, investors were encouraged by his statement that negative interest rates were inappropriate for the time being. Such rhetoric provides the pound sterling with a solid support in the troubled time, as the third lockdown is putting a great strain on the British economy. If the Bank of England governor confirms his stance on monetary policy, investors will certainly push the pound sterling up. Apart from a traditional press conference to wrap up a policy update, Andrew Bailey will also speak at a symposium on Friday, Modern Challenges for the Modern Central Bank, Perspectives from the Bank of England and the European Central Bank. As usual, on Thursday, market participants keep close tabs on weekly updates on unemployment claims in the United States. Last week, the report eventually logged a decline in the number of continuing applications for unemployment benefits to the level below the milestone 5 million. Investors were pleased about this progress. Experts project a further decrease in the number of continuing jobless claims below the mark of 5 million in the week ended on January 30. Speaking about first-time unemployment claims, they are expected to go down at nearly the same degree as a week ago. However, with this publication, investors are warming up before the report of crucial importance, which is due on Friday. They are anticipating US non-farm payrolls for January. On early Friday, the Reserve Bank of Australia will unveil its policy decisions following the first policy meeting of the year. Recently, the Australian regulator has voiced concern over gloomy prospects of employment and inflation. On Wednesday, Governor Philip Lowe announced the intention to put the key cash rate on hold at about zero until 2024. This is sure to deny investment prospects of an Australian dollar. In case of regulator comes up with the same rhetoric following the policy meeting, the Aussie dollar will weaken in response. In the early hours of the New York trade market, participants are alert to long-awaited statistics on the US labor market. Last time, the US non-farms payrolls looked another month of layoff in the US public and private sectors. In other words, the number of jobs contracted in May and December. In the last months of the year, the US public and private sectors lost 140,000 jobs, defying expectations for an increase by 70,000. Importantly, the market gave a muted response to such dismal employment data as investors focused on political events before Joe Biden was inaugurated as a new president. Now, analysts expect the US labor market to add 50,000 jobs in January. Yesterday, the ADP payroll processor reported employment growth much stronger than expected. So the actual non-farm payrolls are likely to surpass expectations as well. In this case, the US dollar will be able to close the trading week with notable gains. You were watching Forex Trader Calendar on InstaForex TV channel with me, Kate Tikhina. We wish you profitable deals.